Welcome back. You're watching The Street. Let's go across to Amit Gupta, country head, sales of Taurus Mutual Fund, who joins us from Mumbai. Thanks very much, Amit, for joining us this afternoon on NDTV Profit. Amit, to get started, it's been an extremely painful day and, of course, a very painful week as well. What's really going wrong with the markets? Yes, there are those global worries, but nothing really has changed from what we were talking about a couple of weeks ago. Greece was a worry. Portugal and Spain were also worries. Back home as well, the bigger worry, of course, is the budget and, of course, all those factors. But what is the change or reason for the change in sentiment that we are seeing now?
I believe whatever sentiment change which we have seen in the last maybe a week or so are mostly on the global front rather than on the domestic front. If you speak about the domestic story, I believe the results have been as per the expectation. Your GDP growth number has been better than the expectation. I believe the worry has primarily emanating out of the fact the dollar rebound, which is causing some worry in the dollar carry trade. There have been a sovereign debt fear, default fear, which is happening most of the European countries, which is playing and weighing very heavily on the investors' mind. So whatever we are witnessing in India are primarily because of the huge FIA outflow which we are witnessing, which is creating a panic in the market.
Amit, but what I want to understand is the kind of sell-off that we have seen, is it really justified? I mean, the worries aren't really, yes, I know it's risk aversion and it's more of a risk play that we're seeing, but the kind of flows that we're seeing is just unimaginable right now.
It is, while we received money, we received the same kind of flows and nobody complained about it. So while when the flow goes out, we are into a position where everybody is wondering whether it is justified or not. See, money will move in the same manner whether they come in or go out. These kind of painful periods will be there in the stock market, and that is the reason as a fund house we always propagate of investing in a long term. So while in a short term markets will be determined with the with the technicals per se, but longer run it will be always fundamental which will rule the roost. So short term pains, nobody can avoid it. If anybody has to invest into equities, they have to bear that, and that is how people make money over a period of time. So short term it is very difficult to to take any kind of a call.
Amit, I just want to latch on to that point that you made. I know your long-term investors don't really change your view on a day-to-day basis, but these recent occurrences, whether it's Europe, whether it's US, whether it's the commodity slump, whether it's the gold, whether it's a dollar above a significant level at about 80 odd level, that's where it's trading right now. Have these factors perhaps made you actually take a second glance of your investment portfolio, perhaps say, okay, let's change the strategy for a shorter period of time, perhaps just to counter the kind of volatility we are seeing, perhaps more defensive now coming back to portfolio? Have you been looking at that kind of a thing, or again you're pretty much neutral, saying okay, we just wipe this off, stay invested for the long term?
Ashu, I believe the answer will be midway. Yeah, to an extent, fund managers will always take a view what is happening across the market. But primarily speaking, most of the portfolio construction is based on the fundamentals which we look at. Yeah, a technical aspect will be always kept in mind in terms of ensuring that there is not too much of a loss incurring in the portfolio. So we will take safety measures. But as of now, not too much of a significant change in the portfolio. We are watching the market closely. But having said that, we are very clear. We invest based on the fundamentals. We don't take very short-term technical calls, though we are watchful of what is happening across the market.
And on the same tune, what is your sectoral preference right now? Which sectors you are overweight, underweight on?
Ashu, frankly, more than the sector, we like the stories individually and we follow a clear-cut bottom-up approach. Having said that, the sector which as a fund house we could be bullish about is primarily related to agriculture, where we believe there will be a lot of stories which are going to get played around, especially the kind of inflation we are seeing in the primarily food articles. To an extent, we are also bullish on some of the industrials, especially which is not related to to the capacity expansion and all. In some manner, we are also bullish on the auto ancillary. So, frankly, more than the sector per se, we are playing on the individual stories, looking at their visibility of the cash flows, and based on which we are making our investments.
All right. So even though the markets are a little jittery, stock-specific bias is what's the guiding theme. Amit, thanks for joining us this afternoon on Profit with a check on the market fundamentals and your take on the recent slump in the equity markets. Well, that wraps up this edition of The Street. Stay tuned. Lots more coming up next.
Hi, thanks for watching, and remember, today is not the last trading day of the week. We'll be working tomorrow between 11 to half 12, so another 90 minutes of trade is what we can expect. Hopefully, it shouldn't be more selling pressure coming back, but that is all the time we have on the show. Keep it with the channel. Up next is Profit Newsroom with Anisha.